no disrespect to all the builders, because I've got quite a few of them that are mates, right? They're not financial services experts. They don't have, masters of finance. They're not trustees. They're trying to manage a really complicated set of books with, some okay software, but not great.
Mm-hmm.
So I often find that when these things collapse, it's really a case of not being able to effectively separate the capital that's caused the problem, and then having to hope that the next deal is going to make enough profit for you to be able to pay back the past, and then you're in this sort of death spiral, right? So that's what I'm sort of trying to think about and figure out how we solve it.
Welcome to Building Perspective, the Master Builders SA podcast. I'm your host, Will Frogley. Join me as I speak with some characters in the building and construction industry.
With a house frame made from true core steel, your home is built to last. Choose the inner strength of true core steel.
Today on Building Perspective, we're going to be talking construction insolvencies, always a hot topic in the media, particularly over the last few years. It seems whenever somebody does go under, it's almost a feeding frenzy from the media. Here in South Australia, we've weathered the storm a lot better than other states. In fact, South Australia only accounted for about 2% of construction industry insolvencies during 2023. But when someone does go under, it can cause a lot of carnage. And today we're going to talk about ways to protect tradies. So we've got Michael Baragwanwath, who's from the TIP Group. Welcome to the podcast, Michael.
Brilliant. Thanks for having me, Will.
Obviously, it does cause a lot of carnage when somebody does go under in the construction industry, and it's usually the homeowners and trades and suppliers who are the most affected. Now, you've been put a lot of thought into something that could offer a bit of protection to trades in particular. Can you talk us through that today?
Yeah, absolutely. And it's something that's being discussed federally and has been looked at in other states as well. And for me, it's around making sure we get the balance right between legislation or regulation that's effective, but doesn't add to cost.
That's right.
And that's always the difficult part to this. So there's been, insurance schemes and other sort of methods, government trust accounts, etc. The challenge with a lot of these models is they put a lot of pressure back on the builder to cash flow everything, which makes it very hard for small builders to operate. So if we take a step back for a sec, what we're talking about here is we know builders in the industry have a lot of different tasks to carry. And one of those is to accept the funds from their clients, manage all of the trades underneath that, make sure there's timely payments to all parties, and remain solvent through the whole process. Big difference to, the 70s where a builder employed a lot more people. Mm-hmm. Now it's all very much subcontracting. Right?
Absolutely.
So we know when this goes wrong, it's mainly the trades that go without, right? And having dealt with this sort of personally with a few other projects we've been involved in, we've seen and heard tradies have gone out and bought the materials, bought the equipment, installed them, and they're not getting paid. And then the builder goes under, and the reality is they're recovering from a collapsed entity, right?
Yeah.
So it's all about how we solve that problem. That's sort of really the focus. How do we make sure that trades are still getting paid? Now, if we look at how we solve that in a really efficient way, the best thing I've been able to come up with, and my world is sort of finance and financial services and trustee arrangements. And what I mean by that is holding money for someone else, right? That's what we do a lot of. The regulation that's put on us as financial services people is massive, right? We've got to hold a net tangible asset capital. So we've got to hold capital on balance sheet that's there in case we stuff up, basically. And we've got a trustee relationship. It's not our money, right? It's for someone else. If you think about it, builders are actually kind of in that position, right? Builders are actually holding the money for the trade's providing the service. But the way builders licensing works at the moment is that all the money's intermingled, right? It's all the same money. So some of it's profit, some of it's staff wages, some of it's, builders, directors' fees, trades money. It's all put in the same pot. And no disrespect to all the builders, because I've got quite a few of them that are mates, right? They're not financial services experts. They don't have, masters of finance. They're not trustees. They're trying to manage a really complicated set of books with, some okay software, but not great.
Mm-hmm.
So I often find that when these things collapse, it's really a case of not being able to effectively separate the capital that's caused the problem, and then having to hope that the next deal is going to make enough profit for you to be able to pay back the past, and then you're in this sort of death spiral, right? So that's what I'm sort of trying to think about and figure out how we solve it. The best idea we can that I've been able to come up with using, my background in real estate and dealing in finance and property construction and other things, is to effectively provide building companies with a trustee service to simply say, look, the client's funds should be paid into a commercial trustee, or you as the builder should meet requirements to be a trustee which we make real estate agents and lawyers do at the moment. So it's not a massive expense we're talking about here. The proceeds for any construction contract go into the trustee arrangement. They're held for the third party, the trades, right? The builder's still able to deduct from there their expected profit margin or a safety margin, effectively, that they can take out because they need to cash flow their own business. But the actual cash for the trades is held with the third party. So it gets rid of this intermingling. And it's not to say that the builders do this intentionally. They don't, right? It's just that when they're put into this position and the cash is there, they use it, right? So the point is, don't let the builders get into the position where they have access to that cash. You at least make sure the trades are secured, their cash is secured. There's a whole bunch of disputes that come between tradies and builders, over whether they've done the job correctly, whether it's been finished, but at least the money's set separately, whereas at the moment it's all completely intermingled. That's probably the single biggest cause of tradies not getting paid, and I think a fairly simple solution. So that's sort of really what I wanted to come and have a chat to you and your listeners about, is saying that, there are people that do care, that are thinking about different ways to make it a bit safer, and are thinking about the trades at the end, not just the mum and dad homeowners, which, make the headlines, but ultimately they get compensated.
Yeah, I understand the concept and the good thinking behind it. Is it definitely going to speed up cash flow in the industry? Because that's something that's really important, obviously.
There's two big things I think come out of this arrangement. So if you have a trustee piece, you build a lot of confidence. You build confidence for the trades, knowing they're going to get paid because the money's there, right? Which also makes them financing for materials faster because they know it's sitting in a trust account, not a maybe. They will get paid, right? The other thing is for clients to pay money in, they're paying to a trustee. So one of the other big things, and I can tell you from being a person that instructs for construction, is knowing what the balance sheet of the builder is. Now, they're going to be able to survive my project, but have the capital to deliver on this asset. So having a trustee arrangement allows it all elements of the, if you like, the flow of capital to trust each other a little bit more and then to move faster. Because if I, as a construction financier, know that there's a trustee account there, I can advance whatever capital is required as it's required. In fact, I can probably put a buffer up because I know it's not going into the builder's hands who I don't know, right? So I think speed can be accelerated when you've got that independent component sitting in the middle there.
What about flexibility over the course of a job? For example, if there's a variation, et cetera, maybe a subcontractor, a trade goes broke during the job. How does this model take that into account?
So two separate issues, I think. If we go to variance, well, variance is still going to require the same process, right? It's going to be fed back up to the construction manager, then back to the client. The client's going to sign off on it. Capital is going to flow back through the trust arrangement. So I think that process would work basically the same. The default or inability of a trade to complete their work, that's ultimately what the builder manager is taking on. That's what their margin's for, right? So having the funds sit in trust and having the builder not necessarily just draw all the capital out ensures that cash is there for that consequence. So if we look at it just across the different parties and where the responsibility sits, it's the builder's obligation to deliver the project if the tradie goes under, right? So a lot of builders deal with that by asking for bank guarantees and similar from their trade suppliers or organising materials on behalf of their trades. There are ways that builders can manage that, but ultimately it's the builder's margin that's responsible for that if it actually happens. Again, having that in a separate trust account addresses that issue because you know that the builder's going to have the ability to fund it unless they run out of margin. And then they, as the shareholder, are going to have to put more cash in. So it's just separating things out a little bit. And I think the other thing that's critical to ideas like this and any other one that gets implemented is it has to work for small builders as well as big ones. Because if you're the biggest builder in the state and he's a lovely guy, but the reality is that he can run a trustee service pretty easily and probably has a really sophisticated funding and finance scheme, right? It's big enough to be able to have that. It's about the small trades, the small builders, the ones that typically the ones that go under. They're the ones that need a really low cost system. So when I come back to my first point around regulation and legislation, that needs to be really clearly thought through. You can't just go, well, we'll do all these things, and it makes all small builders, unviable.
Yeah, absolutely. I agree that generally speaking, the larger the business, the more adept they are to adapt to this type of thing. So, yeah. Okay. So how do you think this is going to how would you like to see this implemented in South Australia?
The easiest way I can think of is to go grab the section of the Real Estate Agency Act or the law relating to real estate agents, copy and paste the trustee section of that and stick it into the building license requirement. That is actually the easiest. It's not that simple. I'm being really glib.
Yeah.
But that section basically covers exactly what I'm talking about, that you're holding money in trust for others, right? I see that as the way to do it. Basically amend the regulation for building licenses to require a building license to either have a trustee relationship or to have the capability within the business to provide a trustee service. So bigger ones can just do it themselves and demonstrate that they have, adequate capital, and smaller ones just simply need to appoint someone. And when, we go what's that going to cost, right? Well, a trustee service with a third party, like in the funds management world, might be, say, 30 grand a year total cost, right? So we're not talking, hundreds of thousands of dollars of additional cost, and that's across all projects for an entire year. So, a smaller builder doing 10 houses per year, they're probably already spending that 30 grand in accounting and bookkeeping costs within their business. Right? So not break the bank. Small cost, but when you look at the trades, and this is following this through to the end, tradies at the moment need to account for the fact that a percentage of their jobs will not get paid, right? So in their mind, when they're pricing their services, they have to assume one of these guys might not pay me, right? They have to build a margin in. Now, most people aren't sitting there with, an actuary working that out, but in their head, people are pretty smart. They're normally going, I just need a bit of extra margin on this sort of job. I'm not sure, right? A trustee service gives the trades a lot more confidence, right? I know I put this in and I'm going to get paid. I don't need to worry about not getting paid. I actually think there's some savings to be had across the whole industry when you improve the trust element.
Those legislative amendments that will be required, is that a discussion that's been had or is going on with the relevant government ministers?
I can only do a few things all at once. We're currently trying to build a large building in Adelaide and having a lot of conversations around history, actually. We really want to see the heritage legislation changed a bit to be more about character preservation than leaving things to rot. Whole other topic, right? We're also having some conversations around stamp duty and how that works with institutions. To be honest, I really wanted to get more feedback from industry before saying we should change this and banging the desk. I know things from a finance perspective. I'm not currently, putting drywall up or, stamping things to the ground. So I'd really like to hear from people, actually doing this and in this industry to say whether this is a big concern or not before I sort of go hassling the government for it. But I'm more than happy to do that. I love talking to them. So.
Yeah, and we're happy to facilitate that conversation with various people in industry. I think, the people being cash flow in our industry is absolutely crucial, and everyone who does work that's of agreed quality should be paid on time as promised. So we're all for anything that's going to enable that. The main thing is we don't want to slow down cash flow in the industry because that's where there could be some really big problems.
Yeah, absolutely. And I mean, look, this is when you look at potential negatives, like adding a third-party trustee is going to sit there and go, well, where's the invoice? Where's that? Where's this? And check things. So, there's potential for that to cause a delay. I would argue that knowing full well the cash is actually there to pay you is worth something. But I mean, you probably go to another topic there, which is how ineffective our current financial services sector is at dealing with the trades and the building industry. So financing for banks at the moment is your real property you're pledging as security, not the cash flow of your business. Whereas, in Europe and America, trades are able to borrow based on cash flow far easier than they can here, far easier.
And banks seem like they're just getting tighter and tighter. Is that correct?
Depends on the sector and what they're doing.
Yeah.
We always see things a bit differently here because South Australia is it's a smaller location, less construction. So from a bank perspective, that's always seen as being more risky when it's not. Buying and selling assets is more risky because they're not as liquid as Sydney. It's easier to sell stuff in Sydney. But as far as construction and trade risk, completion rates are higher here than they are in other states.
That's right.
So we're actually a lower risk. And in fact, fewer businesses go under in South Australia than most other states. Spot
on. And that's particularly true in the construction industry. Like I said at the start, we're only 2% of total construction insolvencies last year.
Yeah. Yep. So,
and a percentage of construction as a percentage of total insolvencies for all industries in South Australia is very low compared with the national average. So big certainly doesn't necessarily mean less risk, does it?
Not at all, no. And that's what, our topic today is sort of around how we build a better system for trust. But the bigger topic here is probably how effective is the financing industry, and it's not, right? And that's a surprise to no one that's listening. But the fact that there's a private lending market, like a grey market for money in construction for projects that should just be financed from the banks is a major problem because the rate difference is huge. It's great for some of our investors that are earning 14% on their money, but it's mental that banks aren't financing some of these transactions.
Absolutely. So it sounds like you're at the point where, you sense there is appetite out there from the industry, and you want to consult with the industry a bit more before making a pitch to government to make those amendments. That's the plan?
Yeah, that's right. And just to make sure that, where we put our time is worth it ultimately. Like we're mainly an investment and private equity business. So when we sort of throw our 2 cents in on an opinion, we like to sort of back that up with a bit of a proposed legislation, and that takes time and money. Happy to do it. We just want to make sure people actually want it. I would hate to rock in with this amendment to the building code and then have your members try and kick our door down and go, what are you doing? So I think that's important to make sure that people that are actually on the ground are listened to and involved in any conversation.
Yeah, sure. Well, it's definitely one to watch, Michael, and certainly Master Builders would be very happy to talk with you about how this might work in practice, some concerns we might have. But it's been a pleasure to have you on the podcast.
No problem. Happy to have you.
Thanks for joining me on Building Perspective. For more information on Master Builders or our guests, please visit our website at mbasa.com.au.